Avlok.
Hello.
Avlok, thank you so much for coming on the show today. You're well known as the CEO of AngelList Venture. Before that, had quite an experience as a founder yourself and working for a couple of companies. So would love to get started with your background. I understand you actually were born in the Middle East and lived in India for some time and grew up in Toronto, Canada as well before going to University of Waterloo and eventually ending up in San Francisco. So would love to hear kind of how that all played out, what it was like growing up, and what brought you out to Silicon Valley.
Yeah, and very, very excited to be here. And great place to start with my background. So I was born in the Middle East in a place called Qatar. It was actually the military base for the U.S. So I actually grew up around a lot of U.S. military planes. Lived there for quite a while. We actually moved out because of the Gulf War, and so it's a bit of a nomad with my family for a few years. So we moved to India. It was more of a pit stop as we waited on our visas for Canada, and so then we finally settled down in Canada in Toronto, where I went to high school and university there. It was a great experience all around. Living in different parts of the world definitely gave me very, very different perspectives because I've lived in many different types of regimes, if you will, and I've gotten to see exactly how the society develops and interacts and evolves. And moving to Canada, and then of course eventually the U.S. after university, really gave me a deep appreciation for what we have here in North America. And so, I went to university in Waterloo. I studied software engineering and then moved out to San Francisco a year after I graduated. A really close friend of mine pulled me out here. I came out here for a weekend. I went to a conference, met a lot of really, really great people, and I made the decision. I flew back, gave my notice, and then literally drove my car down a week later, all the way from Toronto right down through to San Francisco, and I haven't looked back since.
It's a great story. I appreciate you sharing. I understand when you got here is 2008, kind of right in the middle of, or right at the beginning of rather, the financial crisis, and Sequoia had just posted their infamous RIP Good Times doc. So now 2020, how do you think about the difference between what happened then in 2008 and how that affected people in San Francisco, and you as a newcomer obviously have a much different perspective now over a decade later, and how do you think about the difference of the results of this pandemic?
Yeah, it's a great question. The 2008 crisis, it definitely hit right as I moved to San Francisco. And I would say personally, it didn't really have that much of an impact. I do distinctly remember the Sequoia RIP memo, but I didn't really know what it meant, meaning I'd just gotten here. I didn't have any successes yet, so I didn't really have skin in the game, if you will, in the public markets or even in the private markets for that matter. And so I didn't really fully understand and appreciate what had happened. All I really knew was, great, now I don't need to be in South Bay or in Santa Clara. That's where I was living. And Santa Clara is about an hour south of San Francisco. And that, for most people probably don't remember this because they just recently got into the tech industry, but Santa Clara, close to San Jose, Palo Alto, actually used to be the tech center around a decade ago. And everyone who used to come here used to actually go there. San Francisco was not a thing back then. And what happened was, and I can only speak for me and my group and other affiliated groups, was that when the 2008 crisis hit, we basically packed up and said, well, what's the point of being down here when everything is dead and there's no activity? Let's just go to San Francisco. At least we'll get to enjoy our lives in the city. And that actually started a migration of all the young founders to actually go to San Francisco. And I actually remember my very first neighbor was actually one of the founders of Dropbox, Arash, who actually lived underneath us. And very, very same thought process in terms of why to move to the city. And so from there, it was basically this migration of all of these different founders that moved to the city. And it was, I almost would like to call it, it was the golden era. No one really was looking at tech. It was sort of the smaller, the smaller industry, and everyone could just tinker. Now, contrast that to today and what's happening today, it's very, very different. What's happening today is that while the non-tech industries are getting decimated right now, tech is getting amplified. And there are just so many eyes on it. And it really is the future of the economy right now. And we're seeing that if you look at the stock market, it looks like everything is doing well, but in fact, it's just the tech companies. If you just segment it for the tech companies, you'll see they're the ones actually driving the majority of the returns, and the rest of the stock market is actually in a recession. So it does mirror the physical world economy. So I'd say definitely huge differences between 2008 and today, where in 2008 it wasn't a tech related crisis, but it still impacted tech. But today, tech is literally the thing that is driving the entire economy. And so massive differences between the two recessions.
Yeah, I think it's very interesting. People are talking about how this crisis is accelerating tech in a lot of ways, and I put a small asterisk on that to say that some of these things that we're developing, like remote work, for example, in my opinion, I've been thinking about this for a few years, and I think that that was going to be the future, or at least part remote work was going to be the future, sort of inevitably, but not necessarily because of people are afraid to see each other because they think they'll get a virus. So there's certain aspects of the pandemic that are accelerating things forward, I think, in a way that they would have gone otherwise. And then maybe there's just like a slight different angle to it. And it'll be interesting to see how that all plays out. When you first got out to San Francisco, I'm assuming you took a kind of sort of regular out of college job working, using your software engineering degree at a startup. Would like to fast forward to when you decided to start your own company, FastBite, which ended up selling in 2015, I believe it was, to Caviar and Square. Would love to hear about what got you interested in that space and why you started the company, and then how that experience was formative in your development.
Yeah. Yeah. The path to starting a company was actually very it was organic in that I always knew I wanted to work on something, work on my own company, solve my own problem. And so I was always tinkering on the side. I always had these side projects. And some of these side projects actually ended up being cash flow generating side projects, but they were always small, but kept me intellectually stimulated. Then in 2014, I had this observation, and again, it came from my personal need. And my observation then was it used to take 80 minutes for food to get delivered. And this seems crazy now in the days of Uber Eats and Postmates and DoorDash and Caviar, but where they can deliver in 40 minutes or less. But back in 2014, it actually used to take around 80 minutes to 90 minutes sometimes. And the observation I had was, I wonder if everyone is actually just ordering the same set of dishes, because at least that fit my pattern. If I'm ordering Chinese food or Thai food or Indian food, I'm usually cycling through the same sets of dishes again and again. And with that hypothesis, I talked to a few of my friends, and at least within my circle, it ended up being true as well. And I just decided to build the initial app and just hire a courier off of Craigslist to go test out the solution, which was a predefined menu of items that were already with the courier, so that by the time you order it, the courier would be around the corner from you and they can deliver it. Now, there was an insane amount of complexity that went into building something like this. You would need to predict what people would want to order by the location in the city, by time of day, by weather. So there were a lot of factors that went into it. And then you can actually deliver an amazing fast experience. And so our average delivery time was actually 7 minutes for these dishes. And so we rolled it out in beta, and we had a bunch of people that just started using it, and it caught wind of a few folks at Square. And interestingly enough, the team at Cash App started using it first. And then from there, it bubbled up, and a few other folks in the company started using it, and they fell in love with it. And they just love the extremely fast delivery experience. And they just acquired Caviar in the summer of 2014. And they wanted to provide the extremely fast experience as well. So pair them both up. So if you want something super fast, you can get it from FastBite. If you don't mind waiting for a little bit longer, you can get it from Caviar. And so they made a pretty aggressive acquisition offer, which we officially closed in February of 2015. And so I joined as at a director level, and I was driving FastBite the business, as well as at one point I was a product lead on Caviar.
So I want to get to your experience at Square for sure, but before we get there, you talked
Mm-hmm.
about how when you first had the idea, you spun up an app pretty quickly. Well, first you asked your friends, and it seemed to
Mm-hmm.
resonate, and then you spun up an app pretty quickly and built that yourself, I'm presuming, and then
Yep.
hired a courier to take over the manual labor that the app would require. And pretty quickly you realized that you had a winning solution and that you could develop it kind of legit. Um, that's not something that a lot of people have such an easy time with, and maybe it wasn't easy, maybe it just sounds easy in retrospect. But how do you think you particularly think about getting to proof of concept so quickly and developing that early product market fit with something really bare bones, but that does the job before digging in and putting in 110% on building it out?
That's a good question. Short answer is it really does depend. It depends on what the product is that you're building. Sometimes you can actually build the product experience that's needed just through a bit of tinkering and bringing it together. But sometimes you actually do need to build it all out in order to get any sort of strong indication of how successful it's going to be. Now, in this particular case, I did have a background in software engineering, so I did have some of the ability to bring it all together. There were some parts that required some design help, and so on the design side, I would just scour the internet for any sort of templated designs that would be enough for me to put together the initial experience, so I can at least start using it. And I would say that really is the core thing to focus on. Is you really want to focus on what is the minimum experience needed for someone to actually use it and get value out of your product. And I would say that, in my career, I've constantly been reminded that the value you're providing to your customers is everything. And it seems pretty obvious, but it's really hard to lose sight of that. Customers don't ultimately care about how pretty your design looks, or or how bug-free your app is, although they do care, but I would still say that's more of a micro point. What people ultimately care about, what is the most important thing to focus on, is the value part. And value comes from what unique thing or what are you providing your customers that they otherwise just have no other option to get, or if they do, that other option just looks so archaic, so archaic that they would never want to go back to using it. And that really is what is the magic moment in a customer experience. You really want to focus on what is that. So for FastBite, that magic moment was actually getting your food really hot in 7 minutes. That was the magic moment. That's what made people go, wow, this is amazing. And then they tell their friends about it. And so when anyone thinks about product innovation or product development, I would really focus deeply on that. What is the value? Now, once you know what that is and you're trying to build the initial experience to get there, then I would say there is a lot that people can learn online today. There's just I wish I'd started my entrepreneur career today, because there's just so much information out there. And you can learn something about almost every single topic out there. And so my recommendation would be, if you're trying to learn how to code, you can learn how to code today. You're trying to learn how to design, you can learn how to design. There's some amazing templates you can start with. And so I would highly recommend that people try and bring together some of these experiences themselves. Now, if it's not their strong suit, then I would recommend bringing together a team, recruiting a team, and it could be a small founding team. You get a designer, you get an engineer, you're set, and you can move forward. But my recommendation, what I always lean towards, at least for the initial tinkering, is to try and push it forward by yourself as much as possible before bringing a team in.
That's a great perspective. You talk about the importance of adding value to the customer first and foremost. Square obviously figured that out and was able to offer a compelling value proposition early, basically allowing people, small businesses, to accept payments where either they couldn't do that before, or there was a lot of friction in becoming able to do that. And Square basically took on that complexity themselves. I've heard you describe innovation as basically the process of removing friction and removing steps and complexity from the process. Square obviously crushed that, and you've spoken a lot about how you had a great experience there, and think a lot about the company. You thought about it a lot then, and you think about it very highly still now. What do you think made Square so unique, and what did you like so much about it as a company?
Yeah, it's a good question. I would say what makes it unique, of course, definitely the people. The collection of talent, of high class talent, all in one place, was just very, very good. So it always starts with the people. The people were great. I would say the other piece is really focusing on the customer and providing value to the customer. And ultimately for Square, and at least as this is my perspective, as I think about the parts of Square that are growing very, very aggressively, those are the parts of Square where they've managed to truly deliver value, outsized value relative to any other company you could choose. And if you look at payments, it really came down to eliminating all of the hassles, all of the steps in the middle. And it wasn't that, that of course isn't going to be easy ever, but removing that complexity, removing that friction, and taking it on as a company and then going to solve it is actually is a theme that keeps recurring inside Square. It also was there with Cash App. With Cash App, now you can actually download an app and get a bank account. You get to eliminate a trip to a banking outlet where you need to get an account. I haven't even gone to a bank in such a long time, because now you can just download an app and you have a bank account. You can manage everything from your phone. And so you want to think about what are these things that people are doing today that they take for granted, and then just ask, is there a better way? Why are we still doing this? Why did we still, I mean, even as close as early as 5 years ago, we still used to go to a bank to actually get an account opened. And it always used to be super painful. They give you all these papers, you have to sign it. It's just too much. So as I look at Square and my perspective on why Square has been so successful is it really focuses deeply on removing any and all friction for their customers and truly making it a very, very delightful experience, and just consistently focusing on that. And that bleeds into the company. I can't speak for the company since 2017 onwards, or mid 2017 onwards, but when I was there, we actually used to go through planning exercises through a framework called Jobs to be Done, which again is also very customer focused. You focus on what job is the customer really trying to do when using your product, and that was incorporated across the entire company as part of planning exercise. And so it goes right back to the focus on the customer and continuously being focused on the customer. Because as an organization scale, actually as any organization, it's very easy to lose sight of that, right? There's always a bias towards what you immediately see in front of you. And so people always lose sight of the fact that a company is really just a collection of people to go after solving a customer's problem. period, full stop, nothing else. A company does not exist for anything else. It exists to go solve a customer problem, and that's it. And I think over the years, people have layered in all sorts of other things of what a company is supposed to do. But ultimately, that's what a company is. It's a entity that's come together. You bring together a group of people, and you really going to solve a customer problem. And you want to, and you really just want to focus on doing that extremely, extremely well. And I would say that Square definitely exemplified that.
So you talk about how great the people were and the culture, how it was just such an impressive bunch, so focused on solving a problem for the customer. Jack Dorsey, one of the people I admire in the business world, obviously leading Square today and back then. I don't know if you worked directly with him, but if so, or even if not, would love to hear what you think makes him special as a leader, and any experiences or stories you had kind of directly or indirectly related to him.
Yeah, I would say my perspective on what makes him a great leader, really two, recruiting, and the second is really thinking through the design aspect of building a great experience, and specifically honing in on the first time user experience. I'll dig into both of those. Now, on the recruiting side, when I was considering joining Square, I was definitely hesitating. I was just like anyone going through an acquisition. I was going back and forth. I had very mixed feelings about it. And the meeting with Jack actually is the meeting that locked it in for me. And it was actually quite interesting. His vision of Cash App back then, this is 2014, was so clear and so compelling. It's actually what Cash App is today. And just the fact that it was such a clear and compelling view of a consumer product in the future, and that I could see myself using that consumer product, and then I could see what it really meant for the industry if you start removing all of those frictions, and now anyone can just download an app and you get a bank account, and really that means any financial service. That was amazing. That to me just sold it. And I've been reflecting on that meeting over the years, every now and then, and I realized that that is an amazing, amazing, amazing recruiter, and it was very authentic. The vision that was pitched happened, very clear, and so I would say that's number one. And the reason that's very important is you always need to recruit great talent, great people in the company. Without that, you have nothing. So he's amazing. He's really, really, really good at that. Second one is the focus on the first time experience. And this really came about, through different iterations on working on products, where the observation was that that he's very good at constantly looking at the product as a new user, and constantly focusing on how do we improve this? How do we make this simpler? And that, again, like I mentioned earlier, it's very easy for companies and people in the company to forget why they're there. And again, you're there to service customers, full stop, period, nothing else. And especially servicing and really looking at the product from a new customer's lens, and really having empathy for them, and empathy on, like, great, you just showed up to use this new product. Is it easy to get started? Do you have a lot of questions? You have to contact someone to get those questions answered. And so that, I would say, is the other superpower that I've observed. I'm sure other people have different answers for this one, but those are the two that really stood out to me in my time there. Now, there are, of course, a host of other things too, in terms of the transparency, in terms of how the company was run, having an extremely great executive bench. All of those things are clearly very, very important as well. But if I was to just pick out two attributes that I had seen that I thought were very important in building a large and enduring company, those would be the two.
That's an amazing perspective that is hard to get elsewhere. So really appreciate you sharing that. I think about being a founder and CEO. I think of recruiting and vision and being able to tell your story as kind of the two-edged sword that is the most powerful weapon any founder can have. And obviously, being able to tell that story and uh, portray the vision, like you said he did with the Cash App 5 years from when you spoke, that obviously helps the recruiting and the recruiting, having great minds around probably helps to refine the vision as well. So it's a great combination to have. And then on the product side, being able to use a product as kind of a first time user. I've heard him talk about how like I think at Square they don't, and maybe Twitter they don't do any A/B testing. He said because he wants to give every user the best product that they can possibly offer. He doesn't want to use them to basically figure out what the best product should be. And I thought that was an awesome take. That kind of, you see a lot of companies, Google, Facebook, whatever it may be, using a lot of A/B testing. Amazon, I think probably. Um, but then like one of my favorite founders is historically with Steve Jobs, and like Apple would have never A/B tested. So I think that's a pretty interesting combo of skills, and it's really interesting to hear that from someone like you who is kind of up close and personal. Um, I want to get to your experience today, so unfortunately I'm going to skip over the next company that you started, which I think was really interesting as well. On helping people basically get their homes cleaned, I believe, on a pretty regular basis, high frequency, in kind of like a DoorDash fashion, similar to your previous business.
Hmm.
Um, I do want to fast forward to AngelList though. So after you finished with that second company that you started, Naval, I understand, came to you and was like, Avlok, we're looking for someone to lead AngelList Ventures, and I think you're a good fit. And then several months later, you're in the seat. Would love to talk about kind of how that conversation went and how you decided to join, and separately, if you could, I know you're humble, but to your own horn a little bit, like why did Naval come to you? Do you think?
Right. I would say on the latter part, you'll have to ask him. I'll answer the former part. Um, actually, I'll take a stab at the latter part, my perspective, but I'll answer the former part. In terms of the events leading up to me joining, what had just happened was I just gone through just wrapped up the acquisition of the second company that was Ferry. And Ferry, I'll just summarize Ferry. I would say Ferry was a company where we had pretty large ambitions. We it was basically a DoorDash style service for cleaning, for recurring cleanings. We scaled it up in San Francisco and New York. And we'd actually signed a deal with Avalon, one of the largest property managers, to scale it out nationwide. And through the mapping that out, and specifically really looking at how we can make this successful, we had a revelation, which was this wasn't going to be a venture scalable business. And once we realized that, the best path forward was to actually just wrap up an acquisition of the company. And we were fortunate enough that we did find a home for it. I didn't join the acquiring company since I had received my liquidity from Square, and I was also just there were also some conflicts because I was been product lead at Caviar, as well as I wanted to really take some time and step back from operating. I've been operating pretty nonstop for many years. So that was the backdrop, and this was February 2019. Around that time, Naval, of course, who was an investor in my previous companies, had suggested, "Hey, let's connect before you decide to start something new, just to jam on different ideas and what I could look at starting next." At that time, I wasn't in too much of a rush. I was still tinkering, but I'd already switched to using my iPad as my primary device. I was reading mostly. My schedule was wide open. I was enjoying it quite a bit. And around that time, when Naval and I connected, he suggested this role at AngelList, and if I would consider stepping in. and this is specifically for the venture business. And at the time, I didn't really understand venture. I mean, I'd raised capital, of course. I understood from the founder's perspective, but it wasn't really a business that I understood. And I also didn't really have any desire to enter venture as an investor, or to operate for that matter. So what we did was we actually kept doing a deep dive every week, every couple of weeks. And I was actually traveling at that time as well. I ended up in Southeast Asia with my girlfriend, and even through that, we kept touching base, kept really digging in. And usually the way I work is I just like to understand something deeply, understand the full system, understand the incentives, and really see how everything connects. And so that's what we did for 5 to 6 months, actually. It was quite a long time. And at the latter end of it, everything clicked. I really did understand what the venture business was for AngelList, and more specifically what it could become. And there were a lot of the characteristics of Square that I saw in that there really was a large financial platform that could be built. And it just needed to be structured in the right way, and it needed to have a certain product expansion. It had product expansion needs in order to get there. And so once that clicked for me, then it really became more of a personal decision of, am I ready to get back into operating? Interestingly enough, around that time, it had already been 6 months where I wasn't really operating, was living a very different style of life, basically retired. And I realized that, okay, this isn't the time for me to retire. And I officially accepted the role. And Naval asked me hey, can you start the next day? And I was like, well, not doing anything. And so that was it. And I haven't looked back since. It was quite a jolt, first day back operating. But it's been an awesome ride, an awesome experience. Now, in terms of, why me, I can only share my perspective. Given the experience I have from Square in terms of operating and really understanding how a company can grow and continue to innovate, that was one aspect. The other aspect was also just driving and scaling an operation style company, a software enabled operation style company, really gave me the experience needed to scale something like an AngelList Venture. And so I think that's actually the set of things, or the set of characteristics that made it the right fit. And beyond that, to be honest, I'm here to build something very massive, very large and enduring. I have no interest in going through more acquisitions. And so I think that's where the ambition fit was there as well.
So since you've joined AngelList, you got to work pretty quickly, like you said, the next day, showing up after basically thinking you were retired. You built out the syndicates product in 2013, I believe, then the venture funds product in 2017. And earlier this year, you launched rolling funds, which has had somewhat of a viral reaction, or caused somewhat of a viral reaction on Twitter and elsewhere. A lot of people launching rolling funds and a lot of excitement about the potential that they could have to disrupt VC, or more specifically, early stage VC, pre-seed, seed rounds, and Series A. Would love to hear, first of all, your introduction of rolling funds for people who aren't familiar at all, and then we'll kind of assume people are familiar to some degree and dive into some more specific questions that I have.
Yeah, for sure. So rolling funds are basically what venture funds would look like if they were built, if they're originally built in the age of software. And really what rolling funds allow you to do is you can start a venture fund, you can start accepting capital and start investing the capital right away. And you can consistently accept capital. You never have to shut down the fund for new capital. So this will be your one and only fund forever. And the best way to think about how great rolling funds are to actually think about how constrained some of the traditional fund structures are. And the traditional fund structure is one where you go to raise a fund, you have to raise all of the capital upfront and then lock it down for new capital. And then you go into a deployment phase, which is where you start investing in companies. And then you have to repeat the process all over again. The reason that's painful is because you have to raise all of the capital at once, your fundraising strategy ends up being very different. You need to go after the anchor right away. You have to raise everything in a short amount of time within 6, 12, 18 months. And there have been posts after posts of how painful and arduous the process is. And so we did just see a better way with rolling funds. And we just challenged some of the core assumptions around, well, why do you have to shut down the fund for new capital? Or why can't you fundraise publicly? And so there were all of these assumptions that we were really able to challenge, and we built out the rolling funds product. Now, I want to be clear that we also have a large traditional fund business. We have syndicate traditional funds and rolling funds. And there are some cases where rolling funds are an amazing product. In some cases, we do see why fund managers do want to choose traditional funds. But I just wanted to provide perspective on what rolling funds are relative to traditional funds. And I do believe that if the venture fund structure, which is only a few decades old, by the way, but if the venture fund structure was built in the age of software, it would have actually looked more like rolling funds versus a traditional fund.
So I wrote a piece a few months ago, as did a number of people. Mine was called "How Rolling Funds Could Rock VC," and I wrote about how rolling funds are turning, among other things, they're turning 280-day sandhill road shows into 280 character tweets, and then Naval, and that speaks to the ease that it gives the general partners, the people doing the investing, to raise capital from a number of limited partners, the people supplying the capital, without having to, have anywhere from several to several dozen meetings. And there's stories of people who have to go through even more than that over, 10 months or even longer than that. Of course, if you have, a nice track record, it might be a little easier than that. But at no point in history have people been able to, as far as I'm familiar, raise a fund in 10 minutes with capital in the bank account that they can then start deploying immediately. And we're seeing people taking screenshots of getting limited partners invested in their funds in like 4 minutes from when the limited partner first learns about it, through Twitter or whatever it might be, to actually having the money and the commitment for the general partner to go and start deploying some of that capital. Another quote that was attributed to the business was or to the product was Naval. He said, "Raise anytime, raise anywhere." And I sort of added to that. I don't want to go messing with Naval's quotes because they're usually pretty good, but I added, from anyone and by any means. And of course, anyone has to be accredited. So that's one, nuance of it. And any means, of course, has its limits as well. But the intent of that being to show that now investors who just have the skill of investing, but maybe not the time or ability for fundraising, can just sort of post a tweet or do a YouTube video or whatever it might be, host a Zoom, and raise capital from whoever's interested and whoever follows them, without having to spend a ton of time on the road and having one-on-one meetings and everything like that. So to your point, it's kind of a scalable, immediate solution to venture capital that seems like, to your point, if VC was kind of developed when software was around, this is probably how it would have been done initially. How do you see all of these innovations and promotion of solo capitalists, so general partners who are working on their own rather than as part of a firm, micro LPs? I think you're actually both of these, having been an LP yourself and having your own rolling fund. How do you view all of these trends kind of coming together to change the whole landscape of early VC?
Yeah, it's a good question. I'll always go back to the answer of, it's sort of a natural continuation of the internet, having, removing friction. And, if we think about even a decade ago, to run a venture firm, it required multiple people. You'd have to stitch together all of these service providers. You'd have to have you'd have to hire a CFO, you'd have to, hire another admin person to help with a lot of the sort of day-to-day tasks of running the fund. Fast forward to today, we've actually built software and automated all of those things for you. And so there's a natural progression here of software providing more and more leverage. And from my perspective, it actually is that whole thing continuing to play out. And then it went from software providing leverage for the day-to-day administrative tasks or not needing as many service providers, and then software providing leverage hitting the fundraising task as well. And that's basically what we're now seeing with rolling funds, is we've made the fundraising aspect of it significantly easier. In terms of my view on how this will all play out, I think that rolling funds will be a permanent fixture in the ecosystem, and it will continue to grow. I know that there have been, there have been some questions around, whether any of these funds will continue to scale up. And I can definitely say they are scaling up very, very quickly. And so I don't think that will be an issue. They're all continuing to scale up. They're actually making some, amazing investments into companies. And so I do think that these will be permanent fixtures in the venture landscape. And look, ultimately, we're here to serve founders. Whether you're a VC or an angel investor, your job is ultimately to serve the founder. And this does that. Now, in terms of the traditional VC, I do think that will also continue to coexist in a big way. And you can really think about it as stages, right? When you're pre-seed or seed, I think we'll see a much larger percentage of rolling funds. And then once you get to Series A, Series B, Series C, you're going to see a larger percentage of traditional funds that participate there. And over time, what will happen is these rolling funds will get larger and larger and larger, and it'll start being a larger percentage of Series A or Series B or Series C. But again, I do think that it will grow into that. These different fund structures will coexist, and so I don't think it's going to be a one side or one type of fund structure will be all fund structures.
So trying to play the devil's advocate yourself a little bit, you talked about how rolling funds are poised to comprise a large percentage of the pre-seed, seed, Series A, even Series B. Just now you mentioned for the first time I'm hearing it that it could kind of grow into the later round Series C, et cetera. From my perspective, it's, if the traditional fund capabilities are included within the structure of a rolling fund and the options that a rolling fund offers, I don't see an obvious reason that the later round, the big brand venture capital firms wouldn't just switch to rolling funds at some point in the future. And I know VC is like a long life cycle, so it could take, decades almost to get there. But is there anything really significant stopping some of the larger VC brands that we're familiar with from eventually moving to a rolling fund structure where they can customize it a little bit more?
Yeah, it's a good question. I would really say it comes down to, which of the funds are doing the kind of the full life cycle, managing the full life cycle of the fund in-house. And once you get to be a much, much, much larger fund where you have many different partners, there are certain aspects of it that some venture funds just prefer to manage that in-house. And so really, I think it'll be a question of whether they want to manage that in-house or not. I'd say, outside of that, just to clarify, actually, on the earlier point, it's clear from our data that pre-seed and seed, we're going to see very large participation from the rolling funds. And then as you get into Series A, Series B, I would say that will take, we're going to see some of these rolling funds start participating there. And some of them already are. We're seeing fund managers start rolling opportunity funds. These are basically funds to do their pro ratas in the later stage rounds. And so we're already seeing all of this behavior playing out. And so they will start playing in the Series A and Series B stage as well. And so I would say that will be the next jump, Series A, Series B. Series C, I would still say, is much, much further down the line, primarily because once you get into these later and later stages, you're tapping into much larger pools of capital. And sometimes the players that are playing in the Series C onwards are hedge funds. They're actually there are firms that usually play in public markets, also playing in the private markets as well. And so there's a very different type of customer as you go further up in the stages. And so just wanted to clarify that my earlier point around the Series A and Series B.
Yeah, that all makes sense. I have a question coming
Mm-hmm.
from my article or from my piece that I wrote on rolling funds. At the end, I sort of speculated that rolling funds could kind of, no pun intended, serve as a role model for startups themselves. So my basic thinking is, you talk a lot about removing the friction. You remove the friction of the fundraise process for the general partner, and obviously, the rolling funds is a really compelling offering for limited partners to invest as well. But just focusing on the general partner for now made their process a whole lot easier and kind of opened access for more of them to exist. Um, when I think about founders at startups and the capital raising process that they have to go through, it's quite similar in terms of the friction involved and having to commit several months, oftentimes, to going and finding the investors and having one-on-one meetings, in person or on Zoom. Even nowadays, even though it's on Zoom, it's still one-on-one meetings and having to set up this whole road show and sell it over and over again. Why is there not a future, or maybe there is, where startups are raising capital in a similar way to the way that you've set up rolling funds, where they're collecting capital on sort of a quarterly commitments rolling basis from a number of funds, where the GP is kind of the LP in the rolling fund situation and the startup is kind of the GP?
Yeah, I think it's a question of, um, I think it really is a question of what is right for the startup at that time. We are starting to see different startups experimenting with this with this way of fundraising. There are startups that, of course, do crowdfunding. That's not what we do on AngelList Venture, but there are startups who do crowdfunding as a way to raise from unaccrediteds. And there are also startups that will experiment with raising publicly from accredited investors. Now, is it going to have the same level of impact as it did with rolling funds? We don't know yet. We are starting to. So we already have the infrastructure to support this, so we are starting to provide this for startups, and we're going to pay close attention. So it's really, really hard to say what sort of an impact it's going to have. And it's interesting. Usually, you can only assess the impact in hindsight. You put this out there, people will test it out, configure it, use it in a certain way that you didn't even anticipate. And then in hindsight, you're like, aha, that was the killer. That was the killer feature. So we don't know yet if it's going to have the same level of impact, primarily also because the path to fundraising for a startup, there's just so many investors out there. And especially now with rolling funds, we're adding more and more investors every day. And so the one thing I could see happening is publicly saying your fundraising could lead more investors to come to you. So it's a very high leverage way of other investors finding out. Though then there's also a thing that you have to consider where investors usually invest in companies through these networks. There, an introduction's made. There's a signal of like, yep, I'm also investing in this company. So that's the piece that we just need to really think about and really observe how people use it. But we do have a product today that enables that.
So I want to talk about, obviously you guys have a lot of people launching rolling funds, and they're either there's some combination of people with large followings, whether it be Twitter or else people with some investing experience or some founder experience where they can empathize with the founder, or people with actual experience as a GP who just see this as a better structure. So obviously it's going to take some more time to get to this next point that I'm about to get at, but let's use myself as an example. So, I went to a good school and did a couple of years in investment banking, and before that had started a company, but I don't have nearly enough, credentials to go and raise a fund. Uh, and I don't have enough, so I don't have the credentials to raise. I don't have the access yet to startups. I haven't spent a lot of time in Silicon Valley or anything like that. Um, what else? I'm not an accredited investor, so I literally can't do it. But a lot of these barriers are coming down, right? So accredited investor, the definition just got refined a bit where people can become accredited rather than having to meet a certain financial threshold. They can take a number of series exams, which is something that I'm highly considering doing. Um, Gaining access to investments, I think, has never been easier. I can launch a podcast like this and have a number of founders on like I have, and suddenly, a year or two in, have a pretty good foothold in the space where I can reach out to someone I've had on the show or someone who I haven't and say, like, look at this, this track record of being kind of involved in this world. I'm going to have access to some pretty interesting investments if you want to give me some capital to allocate. And then rolling funds being sort of the last piece of the puzzle where I don't have to think about, when's the right time to raise a fund nearly as much, because I can sort of go and start one once I reach sort of a critical mass point and start really small and have, the proving out process kind of play out while actually deploying capital and then raise more over time. Do you think the way that I'm thinking of becoming an early stage investor as kind of from nothing to something rather than having this following already or having the investing or founding experience, do you think that's sort of the right way to think about it? And if you have anything extra to share, would appreciate that. I think people will have something to learn from it. And first and foremost, I'll certainly appreciate the answer and perspective.
Yeah. I would say that the best way to learn investing in early stage startups is to start investing in early stage startups. And what it comes down to really is access, judgment. I would say those are two very important components. Access just means that you need to have access to the companies. The founders actually want you involved on the cap table. And then judgment is, which companies to get involved with. And with rolling funds, the nice thing is you can get started very, very quickly. You don't need a lot of capital to start making those investments and to really start building a track record. And so the way you're thinking about it makes total sense. Ultimately, it comes down to working backwards from what the founders, in this case, they would be your customer, really, really need. And founders ultimately need help with three main things. One is recruiting. Everything comes down to recruiting. Second is finding customers. And the third one is fundraising. Though the fundraising aspect of it gets, I don't want to say easier, but the paths are a lot more paved as you go further down into Series A, Series B. And fundraising really becomes a lot easier when you nail the first two. You nail recruiting and you nail finding customers. Fundraising becomes a lot easier. So I would even just focus on the first two that have to do with helping startups recruit and then helping them find customers. I think on your end, as you're building an audience and you have more and more people listening to it, you'll probably have a founder sort of investor fit, because a founder investor fit for companies that would be interesting to your audience. And if you can help those companies get in front of the audience, that really, really helps in the early stages, especially when you're just starting the company out. Every single customer really, really matters. And so I could definitely see a very strong pitch that you would have around, hey, I can help you with finding customers, especially if there's an audience fit there. So yeah, I would say you're thinking about it in the right way. My only piece of advice to anyone thinking about starting investing in early stage startups, work backwards from what the founder needs, because that ultimately will be why a founder selects you and how your reputation is built in the industry.
That's great. I really appreciate that perspective, and we'll certainly rewind and listen myself a few times to think about how I can, innovate on or incrementally improve the way that I'm thinking about things. I know we're coming up on time, so I want to wrap up here. I do want to give you the last word to talk about anything that we haven't covered so far, or tell people where to follow you and things like that. But Avlok, thank you so much for coming on the show today. I think you have a fascinating perspective from a wide variety of experiences, and really look forward to seeing how AngelList grows and develops into something massive in the future.
Great. Thank you for having me. And to follow along, anything I'm saying around rolling funds, you can find me at twitter.com/Avlok, AVLOK. And thanks again, Jake, for having me on the podcast, and really looking forward to listening to it.